Hey, what's up guys? John Fibonacci here. Today we're going to be going over the government bond yields. Okay? Um, yes. From yours truly. All right? And as per usual, I would like to start off with a quote from a very popular trader and investor. Warren Buffett once said the stock market is a device to transfer money from the impatient to the patient. Now I know we're not really talking about stocks today, but we are talking about the bond yields, and you'll understand why later in the presentation, why I'm showing you a quote on patience. Okay, so that's what we are starting off with today. So, what are government bond yields? Thanks to Investopedia.com, all right, the bond yields, okay, is the return an investor realizes on a bond. The bond yield can be defined in different ways. Setting the bond yield equal to its coupon rate is the simplest definition. The current yield is a function of the bond's price and its coupon or interest payment, which will be more accurate than the coupon yield if the price of the bond is different than its face value. Now, I'm not going to read the rest of it. I will leave that up to you. And as always, you can go on Investopedia to their dictionary and read a little bit more. This is just a small screenshot of bond yield from their website. Now, I know it sounds a little bit complicated. Even I don't really truly understand a whole lot of the lingo around bonds and bond yields. But when we get to the charts, things will be a little bit easier. But if you're one of those people who want to go read about it, get a little bit more understanding, then you're encouraged to do so. Why the yields are important to monitor. The value or price of a currency follows its yield. For today's example, we will be looking at last year's British pound. We were able to share this with you shortly after the fact as to why cable was exploding higher. We went as far as some intermarket analysis as well, like XAU GBP pricing, but we won't need to do that in today's presentation. The current symbols for the yields of British pound are as follows. GB05Y, GB10Y, GB30Y, and that is on tradingview.com. These are the 5-year, 10-year, and 30-year yields. All right, so now we're on the charts. The bottom left has the legend for you. So the black line is the 30-year, the pink line is the 5-year, and the yellow is the 10-year. And there's also, I put the symbols in there as well next to it, just in case you didn't get it on the last slide. So right here, we're taking a look at the yields themselves, okay, and you can see that they pretty much move together for the most part, and this is pretty similar to kind of how GBP USD and Euro USD move, right? They're very similar, but yet they are going to have their minor differences, all right? And just to kind of take it a little bit further, right, the British pound, okay, cable, right, GBP USD will follow these yields. All right, so now all I've done on this slide is added the green line, which is GBP USD, right? So you can see how very similar all four of these lines are. All right, so GBP follows its yields. Now we actually have to take a step back for a second. All right, we're going to go back to the the first chart with only the 3 yields on it. And we're going to be taking a look at around the August to October time period of 2019, which was only last year. It actually felt like yesterday because I remember when this happened, and we were talking about it shortly after it happened, and all that. But the recording is actually no longer in the history. It was a very long time ago, so I don't even know if we'd be able to find it even if it was still here. So we'll go ahead and go over it one more time for this bond yield presentation. So we are going to be looking at the highs and the lows and comparing them to one another, just like we do with the correlation divergence. All right. So we need to look at it one by one. So we'll look at the 30-year first. That's on top. And you could say this is moving sideways. The reason I'm saying that it's going lower is because on the candlestick chart, it actually went lower. But the 30-year really doesn't matter in this specific setup because of what I'm about to show you next. So the pink line, which is the 5-year, is also moving lower, which again, you know, they're correlated. They're going to move very similar, and there you have it. Now, this is what's the important part is when we get to the 10-year. Okay, the 10-year yield is actually making a higher low. Okay, so it's actually going higher while the other yields are going lower. So that would be a divergence. Okay, you could call it a correlation divergence. You could call it a yield divergence. That's what I personally call it, because it's just a divergence between the yields, right? And so you can see the response that the yields had once that divergence occurred, all right? And so now, you know, once you see that opportunity, that's when you go into GBP, you know, and look to take a trade, something of that nature. So that's what we're going to take a look at next, right? Now, I only kept the 30-year on here just to give you an idea of how closely they move together. So even though the divergence was between the 5 and the 10-year, okay, just remember that the divergence is down there. But now we're looking at GBP USD on a candlestick basis, right? Because we don't always, you know, look at the line chart the entire time. So just the 30-year and just GBP USD on the daily, all right? I've already pointed it out to you that cable basically went from 1.22 all the way to 1.35. Okay, so that's massive, massive pips. I believe that's like 1,300 pip move within a couple of months on British pound. So that is very powerful in a way. So, you know, 1,300 pips is a lot, and that's why we started with Warren Buffett, because, you know, you would have to be really patient in order to hold a trade for that long. Basically, you go from being a trader to an investor, right? You're investing practically in a currency. But so there you have it. Now, along with the yields diverging, okay, that is one concept that we have. So we do need to add other smart money concepts. And since we are looking at GBP USD, right, we can look at the dollar index because they are also correlated to an extent. I do like looking at euro and comparing that to dollar index more than I do with GBP USD, but that doesn't mean we just exclude cable from future, you know, studies. So now all we have to do is, once we understand that divergence is there on the yields, we can go in and then study what the dollar is doing as well. And that's going to help us determine, you know, strength or weakness, right? That's relative strength analysis, okay? So now all I've done here is added the green line which is the dollar index. Okay, so we're going to analyze the dollar first. That's what we're going to start with. So right here you can see the dollar index going higher, right? It's making a higher high. So if the British pound, right, is supposed to be opposite of the dollar index, then GBP is supposed to make a lower low, right? Or is supposed to be going lower. But yet GBP actually at the same time goes higher. So if GBP refused to go lower and went higher instead, right, that is a sign of bullishness, right, on the side of GBP USD. All right. And so that basically just adds, more confirmation to the trade, or to the idea. And even if you don't, even if you aren't able to catch the bottom, you can still go into the smaller time frames and understand that the longer term trend is bullish, right? So there you have it. We'll look at one more example today. There's no need to keep this presentation really, really, really long. But basically, once you understand how to do this on one currency, you're able to do it on others as well. So after GBP USD, all right, we're gonna take a look at the Australian dollar. I know AUD USD is popular as well, especially with being a major. So here you have it. And now with Aussie, we're only looking at the 5 and the 10 year instead of the 30 as well, because we're only going to look for basically a break in correlation between these two. So I went ahead and added the AUD USD candlesticks on here just to show you that Australian dollar as well follows its yields. Now we did have some big movements this year for Australian dollar, really across all the currencies, but Aussie, hit a major low. We had a major sell-off, and things were pretty wild. But nonetheless, we'll start with the yields first. So we'll take a look at the 5-year yield, which is in black. And the legend is on the bottom right, so the symbol is AU05Y, and the 10-year is AU10Y for the orange line. All right. So if we look at the black line first, right in here, it makes a low and then a lower low. All right, you can see that. And at the same time, the 10-year was moving higher. Now, at this point, the Australian dollar kind of already bottomed out, right? But then look at the response that Australian dollar gets right after that divergence occurs, right? Even though it's a couple days later, that's the beauty of it, right? Is that you don't have to see it the day of, right? You can be a couple days late to the party and still be able to, finesse the charts. So, and what I mean by that is right here, right? They diverge right at the April time right here. And then look at the response we get from that, right? Beautiful response. But anyway, so like I said, even if you were not able to catch that bottom or even catch a retracement, guys, this is long-term trading. So analyze the trend, right? Look at some of these candlesticks. Look for smart money concepts within that, within this data, right? On the US or AUD USD candlesticks, right? Look for smart money concepts, and they're there. So I'll go ahead and show you a couple. So you have an imbalance right there on the daily, where price, left an imbalance, and then it came back into it, filled that imbalance, and then look at the response from that, right? Traded even higher from there. And there's one more, at least that I have marked up, all right? And this, again, is on the daily time frame, so long-term trading. Not looking to take any day trades from that. And I'm not going to have every single markup on here as well. Here is a daily institutional candle. Okay, there's that down candle prior to the up move there. Price casually comes back into that, and smart money was able to reaccumulate and then mark it up again moving forward. So looking at that markup, right in there, very explosive price. That is a 500. I think it was actually closer to 6 or a little bit more than 6, but I went ahead and rounded it down to 5. 500 plus pips, okay, of explosive price, and that's only a couple of weeks, right? Because on this daily time frame, you can count there's only a few candles, not a whole lot. So a couple weeks of price action, and the market rallied over 500 pips. So very, very explosive price. And that's nice, right? That's what you want. So as far as looking at the other yields, all right, you can go to tradingview.com, and here is the list. It's actually cut off. I didn't mean for that to happen. That's just something that happened with PowerPoint, so it is what it is. But nonetheless, you can go into Google, type in TradingView bond yields. All right, and then if you go to the majors, instead of looking at all of them, I'm just looking at the major 10 years, and here you have it. So here's that list, starting with the U.S. government bonds, Canadian government bonds, UK, German, France, so on and so forth. So if you want to take a look at the other yields and start doing some of your own studying and back testing, I highly recommend you do so. All right. Here are my final thoughts. Again, the value or price of a currency follows its yield. This is long-term trading, not day trading. Okay, long-term, really, really long-term. Use other tools such as seasonality, open interest, and the correlation divergence to stack the probabilities. Okay, so with that being said, that is going to be it for this lesson. You've now been introduced to the yields diverging. So please, go into your own charts and study them. It's highly recommended, and you'll be able to see what type of moves you're able to get on your favorite currency pairs. All right. So thanks guys for watching, and I'll see you in the next video.